can't just. I'm telling you, this crypto shit really throws me for. I'm telling you, it's the one thing that really, really spooks me. Like you got all this other shit going on out there, from what we joke around, Pokemon to fucking dark farts and fart coins. But the amount of money, and supposedly it's not that much in the grand scheme of things, but on the retail end, if Bitcoin ever really blew up, that's where you would see, I think, retail some of the shot, right?
All right, what's going on, everyone, and welcome to another episode of the Market Misfits podcast. I'm your host, Joe Shiva, joined once again by my partner in crime, Smiddy. Smid, how you doing, dog?
Doing pretty well. How you guys doing today?
Good. And we have a special guest, one that it should have probably came on a long time ago at this point, even though, because we're only doing them every 2 weeks, but it feels like it's been like a year since he's been on last. Wall Street Jesus himself, the godfather of the Steamroom, as we call him now. Jay, how you doing?
The Virgin podcast. The one
you were on the first episode.
Right where you pop your cherry. I was on.
That's right. And I didn't tell nobody nothing.
Yes. How you guys doing? All right.
Yeah. Today I got to finally have some fun because we went down.
Yeah.
So it's always a good day for me when we, as everyone knows, I'm like Lucci. I love the short side. So it was a lot more exciting. But for those that have never listened to Jay before or they know him from Twitter, he hosts a show called The Flow Show, which I usually put on the podcast feed as well. And most of the information is excellent. I know me and Smiddy are always listening to it live every time. So I kind of wanted to start the pod with a lot of the stuff that he looks at in the markets, because I think it's really relevant. Usually Smiddy, you and I go through what other people are talking about and all of that. We have someone that we usually analyze on the pod. So I was like, what's better than letting Jay to sit here and kind of present some of the stuff he says, and we'll just kind of riff back and forth on the different things that he's looking at, given the market's in a weird place, right? Like we saw today with what happened with treasury yields with a bad auction. The Japanese 30-year is skyrocketed, and people are worried about a yen carry trade unfold. You have a lot of people bared up to the tits while everyone else is full long for the most part. So, Jay, you want to break it down for us on kind of what you're saying?
Yeah, I think it was just, you got a lot of, I think that's a beauty for me anyway, with some of the stuff I pay close attention to, in regards to the flow, sweeper activity, and positioning, sentiment, that sort of thing. Because otherwise, I think I would get too tied up in everything you just mentioned and then some, right? You talk about a noisy environment. You have bond yields. You have what's going on in Japan with yields. You have they're voting on a tax bill. That's kind of a big deal right now. You got Trump doing this thing with tariffs every day. It's a circus in itself. And, if I didn't have the signals that I give credence to, that I pay close attention to, I'd be trading off the noise out there. And you can see how easily you could get frustrated and kind of just whipsaw it, right? And we're just wired a certain way in this game that makes it, every human being, outside of the select few, we're all wired the same. And it's the total opposite of the way you're supposed to, that you want to be wired to play this game. You know what I mean? When we feel the most bearish and when we're shitting our pants, that's kind of when you should be bullish and you should be buying, right? And the opposite side, when you're feeling good, you had a few winners, and you think you're never gonna have a losing trade again, it's kind of when you should raise your cash, get into a higher cash position, be careful. So the signals that we pay attention to in regards to the stuff you're talking about, especially on the sentiment positioning front, they give you a quick glimpse of where we should be, right? Where we need to be at that current point in time. And for example, now you have all this noise out there. For us to judge whether it's going to end up being a bullish or bearish thing, short term, intermediate term, it's an impossible feat, right? It's you don't have that crystal ball. It's how do you know how things are going to shake out, right? So a lot of times you kind of allow sentiment positioning to get to an extreme or get kind of offside, And regardless of how the news ends up playing out, you get that snapback rubber band type trade, right? And you can feed off that momentum, even if you're not catching the exact bottom or the exact top. So just I bring that up because kind of where we're at now, and we could take a step back if you like after I mention it. We've come a long way off the low, right? And if you remember, Joe, specifically when we were talking a few weeks back, the whole you need to put your buyer's cap on. Remember we were talking about that? That was kind of the reason I made that remark. It's not because things looked hopeful out there, right? We just came off Liberation Day. Things looked like absolute shit. But everybody was positioned for shit, right? Everybody, whether it was hedge funds, systematic funds, which I know you like to talk about, that whole professional crowd was positioned for further deterioration, right? So any glimmer of hope, any of that news that didn't turn out as bad as they planned, or God forbid you get some good news, you get that unwind. And that's kind of what we've been dealing with ever since. And you can see how violent these unwinds have become. They're out of control, right? Like straight up. So fast forward to where we are now, that initial violent snapback rally based off of that extreme bearish positioning is kind of what we've seen take place. And now we're at a point where the majority of, I wouldn't say the majority of it, but the majority of that initial snapback has taken place, right? Where some of these more tactical traders on a shorter term time frame, now they start to feel bullish, right? Now they're starting to feel hopeful about things. So you reach a point in the market where, in all likelihood, there's a high probability of some digestion, right? Where negative news, you'll get some selling, bears will come, try to short that momentum, then they get caught, and you kind of get this choppy, sticky type environment. And I think that's what we're dealing with right now. And ultimately, this is where I think the most important information comes from, right? Because again, you have extreme bearish positioning. Once that snaps and you get that momentum, you get that violent snapback rally. There's no way of knowing how long it lasts. Some are more violent than others, especially now with more algos involved and all. But now you start to see whether this ends up becoming a new bull trend and there are real buyers showing up, or there's obviously a couple scenarios. You can get a range-bound market where the market kind of trades in the range and kills both extremes, right? When the bulls chase momentum, they get caught. When bears chase momentum to the downside, they get caught. So that's certainly a possibility. But what I'm getting at is you want to start looking via the price action, via some of the signals we pay attention to the evidence behind which scenario may be playing out. And that's kind of, I think, where we're at right now. And again, I hate to, and I'm not trying to take the easy way out, and I know it sounds like it, but you don't want to build too much of a bias at this point here. You kind of want to let the evidence speak for itself, right? You want to let price action, you want that to do the talking, not your feelings to do the talking, right? If hedge funds and some of these, the professional pockets of the market, they start to get bared up over a little bit of weakness here again, and now you got them back at an extreme, right? That's obviously another great entry here. So you want to let things shake out, and at the same time, pay attention to the flow of the sweeper activity to see possibly some of the earlier signs and clues out there. What names, what sectors, what subsectors may start to outperform regardless of what scenario plays out. So that's kind of in a nutshell where I think we're at and how to approach it. And it's still early. Obviously, we have one down day today. A lot of bears are going to think the rally's over. Hopefully
don't burst my bubble, Jay. Let me give me a couple days to feel good about the market going down. All right, don't burst my bubble.
Yeah, well, listen. Again, the truth of the matter is we don't know, right?
Exactly.
We all have a preference. Even if a bull trend comes out of this, the type of bull trend or new bull market that is it a late stage rally where some of the mega caps, Bitcoin, and some of the hot pockets. They're the ones who kind of take a leadership role, and you get that last blow-off type rally, possibly. I think that's the beauty of where we're at right now. There's so many different scenarios that can play out here, and the majority of them, if you have your eyeballs open and you're paying attention to the information, it can be profitable, right? If you get the one that you feel most comfortable with and you're looking for, obviously that's where you look to get more aggressive and you pick up the most money. But if you have your eyeballs open and you don't get too hung up on a bias, it can be another profitable spot we're entering in regards to the market as a whole.
Yeah, and where do you have your current sentiment? So like, usually I know how you are, right? When we have earnings flow, you don't care about it. You care what happens like post earnings. But for the most part, flow has been pretty slow, right? Like even liquidity on futures has been really slow, like outside of like specific pockets. But we did have a pickup, it seemed, a couple days ago or the end of last week, where you kind of mentioned, hey, like we actually are getting some legitimate flow that's starting to pump into these names. Has that switched at all for you? Or is that still something that you're seeing right now?
Well, and this is more of a preference thing somewhat, but here's my beef with flow, and it's been a beef throughout even the recent bull market. Okay, you've heard this being thrown around, CNBC, Bloomberg, a lot of talking heads, but it's been a very concentrated bull market, right? You saw like Mag 7, a lot of piling into that initially. Then you had an AI trade where it was just the semiconductors. If you were looking to play AI, they went bananas. So it was very concentrated at times. And the main beef that I've had with flow, even up until recently, it's a lot of the same names that continue to catch the action. Okay. Now, when you go through a corrective phase like we've had, okay, those same names are at better entries because of the pullback. So you can play them, okay? But after 2 weeks of straight up, right, these names, you're done. If you were in them, you will continue to like them, you're holding some, right? If not, you flipped them, you made some money. Like, you're not going to climb the ladder and continue to play the same names at higher levels. You like it, you're holding it. If it was just a trade, you're out of it, maybe leaving a runner. So, and I think a lot of retail falls into that habit. They play the same names because they have the momentum, and they get caught at the top chasing, and that's how they get wiped out. So the main problem with the flow is that it's the same names over and over that are seeing the most aggressive buying. And for me, I'm willing to trade those names, but those, at this point, these aren't the names I'm looking to build decent positions in. You understand? For longer term timeframes, intermediate term, longer term. I'm looking for new names, a new sector to emerge. You understand? Areas of the market that aren't nearly as crowded, that not many people are involved in, not many people are paying attention to. So those are some of the signs I'm looking for out of this recent corrective phase we've been in. And unfortunately, we're not really seeing any signs of that. So when you hear me complain about the flow, it's a lot of the same names. Like, if you told me tomorrow that the more speculative names were going to rally, I can tell you which names are going to catch flow. Okay? It's probably going to be QBTS, right? Archer. It's the same one. Oklo. It's the same recycled names. If the mega caps are going to see the majority of the momentum tomorrow, I could tell you which names are more likely to be the most active, right? The Teslas. It's almost like they're cycling from basket to basket continuously, right? And for me, that's late stage, right? That's not early bull market, bull trend characteristic. Okay, so for me, like, I'm looking for that new stuff. I'm looking for the fresh stuff to get a little more aggressive than I would be if we don't see it, right? So those are some of the things I'm looking for out of the flow. And the reason I bring it up is the corrections usually bring that stuff on. Like, a lot of times you get a correction and it's not the same leaders that were leading prior to that correction. You understand? You get new leadership turning over for a lot of reasons. They're crowded, they're overowned, they ran up so much, their multiples have expanded so much. So that's why I'm kind of a little more eager and excited to look for signs, as you can see throughout on a daily basis. Some of these more underexposed names, but we're not really seeing too many signs of that yet.
Yeah, I think that's a good point about it's the same names over and over again, because it gets really difficult to want to chase that, right? Like we talked a lot about MBIS, right? NBIS, and I bring that up because it's the name I played. But I've been in that since it was consolidating, right? Before it got lit up. Like it's I would call it like a J special. I was in before they ripped up.
Yeah.
Off of a lot of what Smiddy was talking about. I actually have to give props to my boy here. No, he's the one that pointed the name out to me, and I was like, oh, well, this could catch some potential action. I'm like, I'll dabble on this. It's the decent spot. But would I chase it now? Absolutely not. I got in at $22 and it peaked $42 today.
Exactly.
A month. So
if you
that's
still believe it,
tough.
You still like it, you probably still have exposure to it.
Yeah, I sold the equity out and bought a lotto ticket. Right? Yeah. I just bought a lotto ticket. It's fine. If it hits, great. But now I'm not excited about it. Like I've the excitement's all gone for me. So I think that's a really good point, of what you're saying. It's the same names over and over, like the quantum names, the AI names. That theme is
same exact thing, right?
It's just being played out.
That's a perfect example. To your point, right? Now, what we want to see is the next another NBIS type names get lit up and start to see accumulation out of this correction or consolidation, right? For a sweet spot entry type setup. And those are the best kind of bull trends, because you're the names guide you. The more you're seeing new names, the stronger the trend, the earlier you are in that trend. One of the signs out of the flow, when you start seeing the same group of names continuously catch the flow, and that group of names get smaller, smaller, it's usually a red flag. That's usually a sign of caution that risk appetite out there is just not there. Right? So there's a lot of information in itself in that type of flow, but to your point, we want the next NBIS, right? Give us the next NBIS that's coming out of consolidation, that's starting to get sweeper interest and seeing some momentum. And that's ideally what we're looking for here.
Right. And then what else too, Jay? So like obviously the flow is the one part, but there's a lot of other sentiment gauges that I know that you look at that have, back when all this really pulled back, it was interesting to see everybody was completely just hedged up, to the tits as much as they could. But it looks like we've it's starting to like change or flip. Where do we stand on a lot of the other, indicators that you're constantly looking at on a short-term basis?
Yeah, that's a great question too, because that's the other interesting thing here, right? Because of the violent move, right? And the reason for the violent move, which to me, systematic flows have been a big part of this move, if you ask me. When you have liquidity really light, right? When you have this type of backdrop, you're entering kind of the late spring, summer months, when these systematic funds can really start pushing things around, okay? And you have them, if you remember, and you can almost hear it in my voice when I was talking about it back then. When you see them get max short into correction lows, the beauty of that is when that momentum flips, right? They need to not only cover that short position, which creates these buy side flows that didn't exist throughout the whole pullback, right? They were sellers because they were overexposed. Okay. So now you got this added bit in the market where these systematic funds are buying in up, down, and flat tapes no matter what. And at the same time, they cover shorts. And if that momentum starts to feed on itself and build on itself, now they flip from short and now they need to get long, and they add long exposure, right? So that's the result. What we're seeing now is the result of that, where you get kind of this up 8-9 days in a row with no seller, okay? Because all they're doing is buying. And now, the other thing is too, like we have this information. This information is out there, and it gets out there. Like you'll look on Twitter or X, whatever the case. The stuff we're talking about, within a few days, the max a week, everybody's starting to talk about it, right? So now, more and more, this stuff they front run this stuff, right? If you know systematic flows are coming in with a bid, why are you going to wait for that bid to show up? You get in before that bid, right? And let retail and everybody else push you higher. So that's kind of what we've been seeing here. But the interesting part about where we're at now, you have that systematic flow bunch. They're no longer max short, obviously. Okay, they flip long, so now they have some long exposure. they're not max long, okay, so that tells us they still have room to add long exposure, do some more buying, okay. This week in itself, to give you an example, I think this was like the third, fourth straight week where, again, they were buyers in up, down, and flat tapes, okay, not to the magnitude they were a couple of weeks ago, but they're still doing buying in all three tapes.
And can you explain that to people that might not understand what up, down, and flat tape means for
Right,
CTAs?
right. So systematic funds, they work off, like vol control funds, they'll work off the price of VIX. Systematic funds, they're trend followers in a sense, okay? So when they're coming off a match short position, right, meaning that they have as much short exposure as they can put on right now. Okay, they can't put on any more short exposure with the current backdrop. Okay, so if the market goes down another percent or two, they have to buy. Where a couple weeks ago, before they were max short, they are shorting, they are selling into a down 1% tape. You understand? Did I lose you? Yeah, right? So again, example, early in the correction, when these systematic funds were long, if the market went down a couple of percent and VIX popped a couple of percent, CTAs would sell into that down tape. You got it? Right? Early in the correction. Into the lows, they were maxed out on the short side. So even if the market went down from there, they had to buy. There was no more.
Yeah, they had no more powder to short.
Right, exactly. So when, like, if let's say systematic funds are flat, okay? Let's say they're flat. What's normal you would see is in an up tape, they buy. Okay, if the conditions improve, they're going to do some buying. In a flat tape, they're flat, and in the down tape, they're selling. Okay, so they follow the trend. That's kind of their neutral position, right? When I say they are buyers in all those three tapes, up, down, and flat, that means they're coming from an offside position. You understand? They were short. They had a full tank of short exposure that no matter what the market did, they were going to do buying because they were max short.
And it's a lot of assets too. So for those that don't know what it is, like we're talking billions of dollars, like billions and billions of dollars.
Huge numbers. Okay.
And
so
these guys, just to be clear, these guys, it's mechanical, right? It's not some guy behind the desk like Joe or myself saying, "Oh, I think you know what, I'm going to buy today." That's end of day. That's what they're doing, regardless of how they feel. No emotion,
Smiddy. There's zero emotion like us, right? Not like, oh, you know what? I'm max short. Maybe I'll hang in there a little bit longer. The VIX, it broke this threshold, right? Or SPX broke this threshold to the upside. I have to cover that shit. There's no emotion behind it. There's no thought behind it. So that's a great point. And that's what kind of adds, like, kind of to this momentum, this chasing effect that we see, both up and down. So again, getting back to where we're at, those systematic funds. Oh, you know what? Let me if I can share my screen, I have a chart here. I'll show you. Hold on one second. Let me.
Yeah, go ahead.
Yeah. Present.
Yep.
Screen.
Okay. And then once you do that, I'll add it in.
Yeah, make sure I'm showing you.
You're good.
Oh, did I post the? Okay, let me. Where'd it go? There it is. All right. We're ready? I'm good?
Yeah, you're good.
So let me show you what these systematic funds look like right now, okay? So this is just the U.S. equities, right? So we get measures on them globally, just the U.S. equities, anything you kind of look at, commodities, right? Everything. So this is just the U.S. equity market. And you can see down here, right? Pretty extreme max short position. And coming into this week, where they were going to do buying no matter what, like I said this week, so they're going to be a little bit higher. You can see they're kind of right above that zero line. Okay, so what this tells us is that if the momentum continues to improve from here, right? If the VIX trades lower, if the SPX continues to push higher, they still have room to add exposure. Right? So you still have them. They can still possibly be a legit buyer in this market if it's stable, if there's some stability, right? Now, that's kind of how the bulls would look at it. on a short-term basis as a good thing. To me, I don't want this. I want to avoid getting back to max long as much as possible, right? Because when you get to max long, now you're on the other side of that problem, right? Any little selling and you got a lot of supply that's going to come hit the market. For me, what's ideal is you get this kind of climb the wall of worry type price action, range bound, choppy, right? Where you kind of keep bears level-headed and entertained and involved, and you got CTAs still kind of dipping their beak on the short side, because it's almost like you have that floor underneath you, right? If they get to max short state again, you end up, coming to another sweet spot entry, right? Where if you're looking for that, you get back to a nice risk reward type setup again, okay? Or if they linger here, you can play off that floor in a sense. But to your point, to your question, I should say, where we're at now is we're kind of stuck in the middle here, right? Either way this can go, and that's why it's kind of, you want to take a step back and see how some of this shakes out, especially over the short term. Here's another chart of systematic flows as a whole with vol control, okay? And you can see this was even a little worse because vol control, they were really offside. They were the big ones offsides in this mess because you had that big VIX bid, remember, in the correction. So you can see how deep they got, right? Kind of to the 2022 bear market lows, the COVID lows. Like, think about it. This is what we were seeing, kind of what you were referencing to, Joe, earlier. This is what we were seeing into those recent lows, right? You had this whole crowd, as short as they've been in the 2022 bear market and the COVID lows. And obviously, we didn't have anywhere near the type of damage, right, as far as price action is concerned. That's how bearish positioning had become off the 10%, 11% pullback we had in equities. Here's something else I want to show you because this is very similar here, okay? These are the Ridex funds. Now, these aren't systematic funds, but very similar. They move money into different funds, bullish and bearish, pretty much, right? So when they're feeling good about things, they get aggressive in bullish structured funds, right? To take advantage of bullish price action. When they're bearish, they obviously get aggressive in some of these more bearish funds, okay? So this right here is a measure of bearish fund flow from these Ridex, right? So the higher the reading, the more aggressive they rotate money into those bearish funds, okay? Look at this extreme here into these lows, right? So you had not only systematic funds, and we talked about hedge funds and everything else that was bearish, some of these surveys, even some of these trend-following Ridex fund flows were aggressively positioning for more downside into these lows. And it's no coincidence, every time you see an aggressive spike like this, right? Look at the chart. There is at least a temporary floor, right? Even if it's not the bottom, there's a legitimate low put in with a decent rally. And these are the extremes and kind of the offside positioning we're looking at. So here's where they are now, right? So you see that quick unwind, right? Because of the magnitude of the rally, they've obviously rotated all that bearish money out completely, okay? And they usually do that. You can see some of this past history here. So it's not unusual for them to do that. Now, here are the bullish funds, okay? That was the bearish fund flow. Here's the bullish fund flow. And you can see, right, the last I think week and change, how aggressive now they've rotated some of that bear money into the bull money, right? Is it a coincidence right here is where we kind of stall now? And look, even in 2022, they did it here. You kind of had this high here. They did it here. You kind of had this high here. They did it here. You kind of had this high here, right? So you generally, at the least, will get some sort of breather when you get that snapback of rotation from these guys.
And I know you don't like to put on like your tinfoil hat, Jay, and like try to guess what happens in the future. You're trading what you see now, but you notice how in the middle of that chart in 2022, when you had that type of market, that crazy whipsaw, right? Do you think we're going to see more of that this year into next year, like that type of whipsaw?
That's kind of right. That's kind of what we want to try to pick up on as early as possible here. The God honest truth, I have no idea. You know what I mean? I can lean a certain way. I'll tell you what, if we started to see what we were talking about out of the flow, right? These newer names, newer setups start to get involved. I feel a lot better about a new bull trend forming out of here than some range bound type market. But even when you get to, even if you're in a bull market, right, in a bull market mode, and there's newer highs going to be set in the future, when you get some of these shorter term extremes, you at least get a pause. You get a little breather on the upside, right? And that's when you kind of want to, if you were a little aggressive on the long side, you want to kind of take a step back, chill out a little bit, right? Be a little more tactical until some of this stuff kind of gets rinsed here, right? So to sum it up and not to confuse people, we had a really nice setup of a high probability floor into the lows. We had a violent snapback rally, enough to the point where some of these shorter term sentiment positioning levels, signals, they become overdone and we could use a little digestion. And now we just started this little digestive phase, right? Today's day one. And, we see how things shake out from here. Here's another thing like short term, Joe, that you're familiar with, right? Again, these are short. Oh, I don't have the short term one on here. Well, here's one we can look at anyhow.
You talk about ST comp?
Yeah, that's what I was looking for. You have one handy?
Yeah, I probably can grab it for you while you're talking about that one.
Okay. Yeah, if you throw it in, if you can throw it in market updates, I'll go to it right after this. So this is kind of this is the sentiment positioning indicator out of Goldman. Right? What's cool about this shows you some of the prior dates of recent lows. And here, April 4th, you made a low of 2.5. Again, 2022 bear market, similar. 2018, late 2018 low, similar, right? Feb 2016, I remember that correction. That was a spooky one. You were even had more bearish reading here. So you were really at an extreme. This is kind of, I would put into the not short term, but intermediate term category. What you don't want to see is you don't want to see this snap back immediately into positive territory. You want it to linger. See how it lingered here in 2022? You see that? Climbing the wall of worry. If you're a bull at heart, that's the ideal way you want things to play out here. Because what that allows is it allows these pullbacks, what we're seeing today, to be opportunities to add more long exposure. You understand? The only way you're going to get your hands on a decent amount of long exposure is if you get this kind of chop and fill and pull back and rip you to get enough, right? This violent rally we've had over a couple of weeks, you can't even get your hands on enough, right? Comes, it goes, boom. Like you said, the MBIS, in a couple of days, it's gone, right? You need this kind of wall of worry chop so you can get your hands and build positions for longer term time frame. So this is kind of what we're hoping how it shakes out from here.
Yeah, and I think that's a good point too, Jay, because I mean, for a lot of people, at least this was for me too, it's like once that boat started moving up, right? Because again, we're not trying to guess what's going to happen. We're going to let it play out and trade off of that. The rally was so quick. You're just like, oh shit. Now what am I supposed to do now? Chase like all of this, right? Like, do I really have to sit here and chase all of it? Like, you just can't. It's not what you want to do. Similar to your point, like you're better off having a little bit of a rip up, digest, little rip up, digest, and keep doing that versus V-shaped recovery. And now you're like, okay, what do we do now?
Yeah, because, and to your point, you can't, if the same names, like in other words, the first batch of names that rip off the initial snapback bounce, you're significantly chasing some of these things a week out, right? They rip so hard. So the only thing you could do is like start to look for some of the laggards, right? Some of the names that really didn't rally as much. And that's kind of where you find some alpha without as much risk. But an example like the 2022 setup, before we even got into bull market mode, okay, in 2022, a lot of people don't remember this. We made a low in the fall of 2022, which is here, okay? And after that, we still had to deal with this, right? Before kind of into 2023, that's when things started to feel more bullish. You had more names involved. You had AI starting to pick up. The semiconductors were breaking out, right? In this space here, which was more of, I would say, range bound, even though the lows were in, there wasn't that bullish feel to it. You had banks leading one week, then you had the industrials leading the other week. As a matter of fact, I make a point that into the lows in October, if you bought, I think it was Tesla, Amazon, thinking that it was a bottom, okay, by the start of 2023, 3-4 months out, you would be down on those stocks, even though the market was higher. That's how choppy things were net. But if, for us, like looking out of the flow and looking for accumulation, there were some early signs of like semiconductor buying, right? God forbid you had your eyes open to NVIDIA and some of the flow in that name, or in AMD early on. Those were, you're talking about killer winners, SMCI. So that's kind of what we want to start looking for out of the current setup we have now. This runaway rally, this case, this melt up, people feel bullish and it sounds great, but ultimately it's not a good thing if you're a true bull at heart. It's never a bull. You want to climb that wall of worry, and you want as much chop and pull back and fill it as possible, at least initially, to give yourself some time to pick up on some of the sectors and names breaking out. You have the short-term chart up there. I just want to show you one more thing here.
I posted it. It's right there for you.
So, like some of the things we just looked at, I would throw into more of the intermediate term time frame category, right? Because like I said, like that information kind of tipped us off to a high probability floor over the intermediate term being put in because it was extreme. This is more short term, right? So this is more of a tactical, actively traded sentiment indicator, okay? Now, when you go into corrections, these things are going to really get washed out to the downside because they're short term. And when you get into runaway melt-ups and bull markets, they're going to go overdone to the upside, right? We had a zero reading, okay, for a few days into the lows. Zero on this thing.
Has that ever happened?
Yeah.
Is that a first?
In corrections, it definitely has happened.
Okay.
It's not that rare. Again, in corrections. In bull markets, bull trends, you're not going to get that low. But you can see we got pretty close here in what is this here? This is, I got the date blocked off. April, March. Oh yeah, so this is like February of 2025. We kind of danced there before snapping back. So this is really short term. But you're up at an 80, which is really high for this thing, like extremely high. Meaning that a lot of the more tactical money out there, whether it's short covering, chasing, option buying in short-term strike, a lot of that more tactical positioning and flows, they were getting a little too crazy on the bullish side, okay? For good reason. A lot of them were getting their asses squeezed from being short, Most of them had no exposure on and needed to put some exposure because the market was rallying away from them. But when you get to these extreme measures, and you reach a point where usually it doesn't have to be apocalyptic, but at the least you get some stickiness, some digestion, right? And you want to see that at the least, because that's where, without that, you have a lot of risk you got to take on for any new long. So that's kind of how it sets up currently. Now, this is before the sell today, so some of these short-term measures are going to look a little bit better. But on the more tactical timeframes, we had some heat, kind of tipping us off to some digestion. And big picture-wise, we still got a nice setup. We don't want to ruin it. You understand? So we want that wall of worry to remain, and we don't want this melt-up to continue. That's ultimately my fear, is that this melt-up continues, and because of the flow we're seeing, kind of the same names and the chase of the same names, a lot of times that signals melt-up chase. And that's what's got me feel a little uncomfortable here. I don't want the melt-up.
Right. And with all of this though too, Jay, like I know that you don't focus too much, and I'll take this down. I know you don't focus too much like on the macro stuff. Like I know you pay attention to it and you watch it, all of it, but it's like you're talking right now, like these are the sentiments that I look at. This is how I do X, Y, and Z. Does any of the macro stuff though start to creep into your head at all? Like the 30-year in Japan. I know you said that's a lot of noise, but I am just curious. Like, do you pay attention to that stuff and like the 30-year yield and how that affects the markets and things like that?
I pay attention to it. I enjoy and like to follow it. You know what I mean? Because I love the market. But the God honest truth of the matter is, it only hurts me. It only will do damage to me. Okay. And I'll give you the perfect example. Recent, so everyone can remember. Okay. Into the 2022 lows. All right. There was no way you could feel bullish about anything. You had the Fed just in the midst of the most aggressive tightening cycle we have ever seen in interest rates. Okay, you had almost a guaranteed recession, right, coming in 2023. I don't know a single person, including myself, that didn't think at least some sort of recession was coming in 2023 based off what the Fed did. Okay, the housing market cooling off at the least based off what the Fed did. Okay. You had every macro strategist, I swear to God, every single one from the most reputable ones out there were forecasting a down year for 2023. Not one had an up year. Not one. Okay? And you know how that story, the end result there, right? Now, again, if you get tied up into all that, you're human. You're just like any of these other guys, right? And I give them I'm not going to lie. Some of these people know a lot more about the macro side than I do. Right? You got some smart dudes out there. But the truth of the matter is, when it comes to this market, even if they're smart, they know the game. If they're all in the same boat, it doesn't matter. You understand? If everyone's already positioned for that, you have to take the other side. You have to look at the other side. You understand? No matter how hard it is. And that's a difficult thing to do.
Yeah, and that's why I think that was your warning when we started to get to the bottom. You're like, everybody is so short right now that no one has any upside. Like the call put skew was insane. Like everybody's got puts. You're in the 99th percentile and nobody wants any upside, calls to buy, right? So all of that time you're sitting there like, if you want to be true to how the market usually works, like you need to be the contrarian, because usually when everyone's on one side, it doesn't go that way. And then what happened, right? We've ended up ripping higher a lot faster than any of us wanted to, which a lot of is because of how short everybody was and how they had to chase into the rally, right? So that's where I'm getting kind of a little bit, I don't know, I wouldn't say excited, but we're finally seeing the sentiment switch a little bit, at least from the people that I follow, where they're like, now everyone's getting all bulled up. I'm like, okay, well, if I can get all you bulled up and we just keep doing this shit, I feel a lot better about me wanting to be short, into the end of the year, right? Like I'll have more confidence. And you know how I trade, Jay, right?
Yeah.
I'll take longer term positions, but most of the time I'm getting that shit paid for by intraday scalping. So it's just a totally different ball game, right? I play what's in front of me on a very short term, but the big money to be made is always on those longer term plays, like a Ranchero Costco roll or a big pull that you get. Like, I'm not going to sit here and tell everyone like, oh yeah, I knew we were going to get that rip low, or I was positioned for it. I wasn't. I wasn't positioned for the long side either. All I did was scalp the living crap out of all of this. But now we're getting to that point where I'm like, can we keep pushing this bull narrative? Then I might get my Gem Carson 35% drop, right? Like, I don't think we get that, but you know what I'm saying? Like, that's what's really interesting. You want to be the contrarian.
Yeah. Well, you weren't going to get that in April, the way people were positioned. Like for that, and I hate to say, because I don't like talking uncertainties, because there's nothing certain in this game, right? Sure. Your risk is 2008 apocalypse at that point, right? Something big has to go boom, where none of this positioning sentiment stuff matters, because it's full out liquidation mode. You understand? From
Black Swan.
Every crowd out there, right? And there's a risk of getting that. We saw that. That's why 2008 scarred so many of us. You know what I mean? Like 2008 was the spookiest of all. Like that was the one time where you seen shit, everyone maxed out, bearish, nobody owned anything, and shit was still breaking all over the place. Like economically, right? The economic system, as we know it, was cracking around us. So like that, obviously, that's an exogenous apocalypse type event. And you just don't get them, right? There was one 2008. There's not too many of them. The majority of times, to your point, you need some sort of rally like this before you can get that continuation lower. You understand? It's a like example was when those lows were made, like the floor was put in. I'm not saying this market can't go lower 6-9 months from now. The market can't go lower now because everyone's positioned for it right now. You understand? They're going to have to get squeezed out of their trades first before this market can continue lower. And that's the high probability trade that was there. You understand? So to your point, though, and this maybe probably is the bull, the perma bull at heart in me. I think that people are skittish enough to where, if you got a week or two of some volatility selling, you would get people bared up again close to the point where we were at. You understand? From here, I'm saying.
Sure.
And you would have the same exact setup. Right? You would have another setup where everyone's looking for this one to be the big one, break the lows, and they get squashed again. Right? Ideally, what you want to have the perfect setup for a short, you want to see this all get unwound. Kind of to Miguel Elliott's point. You understand? You get them forced back in. They don't want to, but they get forced on the long side because they have no choice. And then once they get forced on the long side, that's when the market can catch them all. And then you get all that supply coming to the market and that momentum down.
Right.
So you need more unwind here to get that better shorting opportunity for that big boom type short that you're looking for, in my opinion.
Right. And I was going to say, we're only 5% from highs on SPX. I think NASDAQ's not too far off. Wouldn't it just be something fun if we get everyone chasing into that? I'm one of those guys. I'm mostly cash over here. So I'd be sitting there saying, all right, I'm getting the phone call of, hey, why the fuck are we not, making money here?
Yeah, you know exactly, Smiddy, right? Even if you don't want to buy, well, you can't just sit there and watch, right?
Oh, exactly. Exactly. Yeah, because that's the phone call you get is like, hey, what the fuck, why are we not making money over here? And it's like, you got it, boss. And next thing you know, we're playing this game of how do we unwind this without getting hammered? So
yeah, that's the risk, and that's kind of what I was referring to, the risk of the melt up type stage where it can get steep. I mean, honestly, like a true melt up, I wouldn't be shocked you get SPX 7,000, but ultimately, that's not a good thing. You know what I mean? I don't think that's going to be a good thing at all because you're probably going to get the same names that we're seeing just go parabolic, right? Get overextended. They become more expensive. A lot of these names are expensive already, right? Especially these growth names. So there's no good that comes out of it. Again, there's short-term upside. It's fun. But overall, you don't, like, put it this way. A basket of long exposure, right? And you like to do this, Joe, too. And Smiddy, you too. Like, if I'm going to build positions in names longer term, meaning at least like 9 months, a year out, right? At the least. Okay, I want to bet on a name. I want to do it where I don't have to pretend like I'm playing musical chairs and get out in the nick of time before shit falls apart. You understand? Mm-hmm. Like when you want to build baskets, you want to climb that wall of worry where you get, enough time to make a bang and a continuous new names coming in. Think of, let's say, COVID. COVID was the perfect scenario. You had COVID, right? You had the whole global economy locked down, right? As gloomy as how could you be bullish in the heart of COVID? It's impossible, right? No vaccine. New York, you saw tumbleweeds going across, right? There wasn't a soul to be found. There wasn't a business open. The Fed threw in the kitchen sink, rigged the game. Everybody was bearish. Nobody had long exposure. And you climb that wall of worry all the way, think about it, all the way to the vaccine came out, which was what, a year and a half later, right? That whole wall of worry, you had a chance to buy every dip and make money. All those stay-at-home names, back names, meme names, right? So if you're looking to build positions over like a 6 to 12 month time horizon, that's the sweet spot where you can make a big dent. When you're trying to chase a melt up and it's quick, you don't know how long it's going to last, And then when the music stops, you got to get the hell out. You don't want to have too much weight because you don't want to get caught with that at the wrong time, you know?
Yeah, and that's what's so hard now, right? Like
Yeah.
I've pivoted my trading to be much shorter term. I rarely scalped shit before, right? That wasn't my thing.
I didn't know that.
Right. No, that wasn't my game. My game was always much more along the lines of the way that Ranchero trades, right?
Wow,
or
okay.
playing flow. I've pivoted it a lot over the last probably 6 to 9 months to be a lot more of the scalping side of things.
But that was
maybe even a little bit before that. But I go back and I look at after they put in that low at the end of, I wouldn't even call it a low, but right before 2024 started. I mean, the trading, to be honest with you, this game is really difficult, but it became a lot easier because all you had to do was just go long on stuff and it was a slow grind up, right?
Yep.
And I was able to play positions. And then every once in a while, you get like a little bit of a couple days down, but it wasn't like a crazy rip in your face where volatility is so high and there's fear, VIX is low. Right now, okay, I have a dip, I can get back in. To your point, it was much easier to build a basket of long positions and trade around them and roll and play that game. Now it's become a lot harder. And again, the hard part and probably for me is I've gotten so good and like used to scalping, switching that mentality when all this volatility eventually dies. I know I can do it, but it's a lot tougher because when you're sitting there and I can play futures and I can go and just play, a handful of contracts, and then within 5 minutes, I'm up $5,000, right? That's what am I supposed to, it's really tough to flip that mindset for people that have a lot bigger account sizes than me. I mean, it's unbelievable.
Yeah.
But the flip side's there too. You can manage
your risk a lot more effectively intraday, right? You're not carrying overnight, worrying about.
No, I care about 10 minutes.
Tweet, what do you do in the middle of the night?
I care about 10 minutes. What's going to happen in the next 10 minutes for me? And sometimes even shorter. I care what's going to happen in the next 1 minute, right? Yep. So that is much easier because I don't have to hold anything. It's only recently that I've actually started, and Smiddy, I know you and I talk about this, like actually like holding stuff longer, like the NBIS or something like that, but they were very specific speculative names. I've never played this kind of trash. Like I call it trash. Like it's just because it is to me. This is not, I usually play a Tesla, a Meta, an NVIDIA, like everybody else does. I played silver, Jay. What the fuck am I doing buying silver ETF, right? Like
Smiddy will tell you about gold. I mean,
gold too.
Yeah. I mean,
so totally different.
Now you gotta, but what you just said, that was the best move you made, becoming more tactical at that time. Because if you didn't, you would have got your ass kicked. You know what I mean? You would have got caught literally into the highs of a correction. Where think about the semiconductor. You know how many people got caught chasing the semiconductors off that AI hype into the highs and thinking that it was just some consolidation for a month or so. NVIDIA will be at new highs in a week or so. The growth is crazy, AI. The semiconductors are still feeling pain from back then. What is that, a year now? They got demolished. So that was, I don't know whether you got lucky or you were looking to make that move when you got tactical, but you couldn't time it any better. Because if you didn't, you would have lost a lot of money, Yeah. So the ability to pick up on that, though, Joe, is one of the important parts of the game, And just even as simple as if, let's say, scalping's your thing, right, to your point, and it's not the environment to scalp, you understand? Like you were saying, it's more of a slow grind, melt, or whatever it is. You can't trade that way in a different environment. You got to wait for that environment to trade that way again. And if you're not comfortable trading a certain way in a certain environment, then don't trade. You know what I'm saying? You can't, nothing works all year round and regardless of the market environment. I mean, that's just, that's what the market is. You kind of got to wait and pick your spots, or to your point, you get a little more comfortable doing one thing more than the other. You have more success doing one thing more than the other. And, you wait for that time to come around to make a dent. But that was a great move on your part, getting more tactical.
I mean, we'll call half of it, or at least half of it, luck at the time. I mean, I think a lot of it too is just the influx and because we've talked about this, Jay, right? You get this influx of zero DT shit that everyone's doing, right? Yeah. It works until it doesn't, right? That's the game. And when I started to see it working is when like, oh, let me try this. And again, I'm more comfortable with futures because I don't have to worry about strikes. I don't have to worry about theta. I ain't gotta worry about shit. Right. I know what my price is. I know what I'm getting per tick, and that's all that matters. So for scalping, that just works better for me. But yeah, I mean, even now, like I've gone more into even doing what you do. Like I'm gonna trade equity,
Right.
take the position. Now you have to have a decent amount of an account size to be able to do this, obviously, but I'm gonna play the equity game where I don't have to worry about any of this shit. And then if I get what I need, I get out and okay, I got some cash. I'm gonna throw a lotto call at it, and then I don't care. Right? That's the biggest thing in this environment is a lot of the stuff I have now. I'm like, I don't care. But it's also you get lucky. Did I get lucky on NBIZ? Yeah, probably. Of course.
That's
of course I got lucky.
You can't control. Of course. You're gonna get lucky and you're gonna get unlucky,
Yeah.
But and that's one thing and I think that's to pat myself on the back. The one thing I do well is I definitely am real to myself. Like I know when I can't do something as well as I would like. Like for example, okay, and I think this was the most frustrating thing for me. Okay, the 2022 lows had the ideal setup we were talking about, right? If we with the all sides positioning and everything. Okay, you had some chop, you had some consolidation, everything was setting up the way I like. Then you had this rally out of that. Okay, exactly what we're looking for, but this rally consisted of just mega cap mag 7 names. Okay. Now that's the last thing, how I play. Okay. That's the last thing I want to play. So I'm sitting here and I'm watching everything I expected out of the market to pan out because of positioning and everything. But there are no underbelly growth names, no new names being bought. They're chasing mag 7 mega cap growth names. You're not playing equity in those things. Right? You're strictly call buyers. That's it. Right? The only people making money off that. So what I do, unfortunately, that the 2022 rally off the lows, the bottom, I didn't benefit from that nowhere nearly as much as I expected, or I did off the COVID lows, or any true bull market, as I like to call it. So to your point of luck, you need things to pan out a certain way, and sometimes they do pan out the way you feel most comfortable with, the way you most success, and that's where you're going to make the biggest dent. But people try to do a little too much in this game, right?
Yeah.
And being able to sit around and wait for your fat pitch, as they say, I think is probably one of the most important things, right? It's not like you don't want to dabble doing other things. Like again, example, let's say intermediate term swing trading is your game. That's where you make your money. It's okay day trading and scalping to kind of buy yourself time to get to that sweet spot swing trading environment. You understand? But if you try to get rich, scalping, right? If you treat scalping like you did swing trading, you're going to get your ass handed to you. And then when that swing trading environment comes around, you're not going to have the bullets to fire. You're going to be frustrated, right? Emotionally erect. So it does a lot more damage than good. You got to try to stick around, and we're all different. Like you like to scalp futures. I like to buy equity growth. Smiddy likes to buy gold and metals. Everyone's different. So there's no right way, but you got to kind of hang around for your fat pitch. Basically, is the best way I could put it, because it's going to show up. It's a matter of when. That's all it is.
And I think that's a really great point. And honestly, gold's been one of the most boring trades of all time up until the past couple of years, right?
Yep.
Nobody was sitting around unless you were on the metals desk. Nobody wants to trade gold futures. This past, really end of last year into this year has just been a really good time. And I happen to have insight into the gold bullion business. So that kind of helps out with, what I'm seeing. But yeah, that's I would just wanted to add to that and what you're saying. This is just a good opportunity.
That's a great point, Smiddy, right? That's where you're going to make your dent, right? Getting aggressive in gold, right? If you did it a couple of years ago, right, where every gold bug was frustrated as all hell because the thing couldn't get out of its own way, right? You would have got mangled, right?
Yeah.
So
and then you're just bored.
Yeah, exactly. There was no movement, no nothing. So just being able to stick around and then take advantage of that time when it was time has a lot to do with it in this game. You know?
Yeah, and I think a lot of what you're saying too, Jay, that's good to point out for people is, and I've been slapped on broadcast by Jay for this, by the way. I have. Is not overcomplicating shit that you usually don't pay attention to, right? Like there's certain times where I'm like, oh, what about this? And then I hear Jay go, what the fuck do you care about that? That has nothing to do with how you trade. And I'm like, that's a good point, Jay. I don't know why I'm staring at this because I'm fucking bored, right? I just the environment's dead. I can't scalp anything. I definitely don't want to go long anything right now because of X, Y, and Z. I don't want to go put shorts on because I don't know what's going to happen, right?
Right.
So and those environments different. What ended up being, and I forgot to mention this when I started doing the more of the scalping, is I got really into gamma, Jay. Like, I think you know that now. I got really deep into it. And it was probably the biggest unlock for me was understanding dealer hedging flows and like all of that. Is it hard? Fuck yeah. There's so much interpretation to it, of course. But that was a big thing for me on why I started swapping more to the shorter term stuff or playing all of that. And for me, a lot of it now is learning it. So when we get back to less volatility, I'm going to have to sit and shit so much longer during the day if I'm going to play indexes that I need to understand that so I know where we have potential to go or support and resistance areas or how the gamma is going to unwind. But that was like the key for me is like that. And then on top of it, not worrying about the other shit. So like, all right, I'm going to look at short term. I know what I'm looking for now in specific flow. And if I'm unsure, that's when I ask you and say, all right, Jay, what's your take on this? Or if I'm unsure on a Condor with Ranch, because I would love to get back to being able to sell premium when, you know, the VIX is high, it's too much fear for me to do it. Right. Like, what do you think? Right. Because all it takes is one bad catalyst in a headline market and everything goes up in smoke temporarily. Could be a day like today. Yeah. Right. Today's a perfect example. You get a bad auction. We go down. Then all of a sudden, all of us are talking about Jem Carson's 35% crash and all of that, which is hysterical. And then I'm like, okay, just remember it's one day. And Jay's like, yeah, guys, please, for the love of God, remember it's one day.
Yeah, like we're
means
gonna go
nothing.
up, like we're gonna go up for like 60 days in a row or something, right? Yeah. But it's hysterical to your point, right? The 3,500, everyone. I mean, 1929 charts, you name it, they were circulating all over social media into the lows. Right?
That chart was great, though. The 1929 chart was
I was thinking of you yesterday. But I was going to even retweet. I didn't want to blow somebody up. I don't even know their name, but they got a big following on X. They actually got some cool macro charts and shit like that. But literally, one day it's apocalyptic, Armageddon bearish, and literally exactly 2 days later, it's the complete opposite. Melt up, runaway bull market type shit. You can't make it up. And you know what changed in the matter of those 2 days? The market, had two big updates. So sentiment completely shifted from whoever is behind that. But it's hysterical that you say the 3,500 target, right? You didn't hear a peep about it for the last couple of weeks. You get a down day. Oh, here it is. It's the start of it.
Yep, we're dumping. That's what Jem said. To be honest, I think what I'm mostly pulling for with that is not that, like, obviously, again, I would like it to happen for a couple reasons. One, I mostly, because I'm given my age, I would love to be able to have what I would consider a generational buying opportunity in the indexes, right? Yeah. Like a big washout. So it's selfish for sure. Feel bad for my parents, but good for me, right? That's part of it. The other is I would love nothing more than for someone to have called the run up, the dump, the run back up, and then the dump again and get it that perfect. Right. Yeah. It'd just be cool to see more than anything else than saying, hey, like, wow. And again, that person might screw up a call later on, of course, but
whoever that person is going to screw up exactly the next call after everybody flocks him and tails the next call because he was right 3 or 4 times. It happens all the time, you see it with the Tom Lees of the world, Kalanovich with Kalanovich from JP Morgan. Went from the most renowned top analyst on the street, blah, 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 gets one call wrong when everybody was relying on it. And, all of a sudden now he's trolling on Twitter. Right? It's crazy how shit happens so quick. But Mike Wilson, you remember from Morgan Stanley, he was another one. The 2022 bear market lows really ruined a lot of these that bearish bias analysts that were really bared up. Looking for that recession, which made sense. But again, it's just, this game doesn't always make sense. Obviously, a lot of times it doesn't make sense. And that's what happens, right? And you always see that too. After, if everybody knows about 3-4 right calls in a row, they probably didn't play them. Okay, and now they're looking for the next one. And the one everybody plays, of course, is going to get demolished. Not just wrong, demolished. And it usually happens all the time.
Right.
But that's the game. No one can be right all the time anyway. Right? I mean, that's completely
It'd
normal.
just be unreal if you could constantly bat 1,000. You know what I'm saying?
but
Like it just doesn't
what
happen.
in what part of life can you bet 1,000? Think about it.
No, you can't.
There's
I mean,
no-
maybe in T-ball back in the day, you could have batted
No,
1,000.
you can't bet 1,000 people. Who are you kidding? I'll throw a fucking knuckle change at you, and you won't know what the game at. But yeah, you can't. That's the thing. You want certainty in a game that there's no such thing as certainty. You know,
Right.
It's just how it is. But here's the thing. Getting back just to the market in itself, kind of to your point, I think what we need to do here twofold. One, we want to try to take advantage now of some of these shorter intermediate term signals that we pay attention to and kind of wait for spots there. So in other words, when let's say we wash out tomorrow again and we got now tactical bull signals, right? We want to look for snapback plays. Right? When everyone's looking for more downside, that's kind of where we want to lean bullish. If we rally back then and we get a little too heated, that's where you look for kind of a tactical short. And in the meantime, while you're waiting for all that stuff to shake out, paying attention to the flow to see, kind of how are they starting to position for it, right? Let's say if they're positioning in defensive names and staples, you kind of getting a feel of what type of market we may have on our hands for the next couple of months. God forbid if we start to see some underbelly growth, and I wouldn't even say bullish for the indexes, but that would be the ideal bullish scenario because no matter what the market does, if it chops around, if it's even bearish buys to the weak side, if they're sweeping new names under the hood, right, potentially new leaders, you can find alpha in names while the markets aren't doing anything. You understand? So while you're scalping the indexes, you could start to build positions in what's that symbol again that you had, that Russian Yandex thing?
NBIS.
Right? So let's say, like, again, next week we come in and not NBIS, but the PBIS starts to catch aggressive sweeper activity, right? And it's a $15 number coming out of consolidation. No matter what the market may do, even if it chops around, if they start positioning in these type of growth names under the hood, you can find alpha there while you're scalping the indexes. So that's kind of the best of both worlds while you're waiting for some of this extreme big picture stuff to set up. Right? And you see Miguel, he pounds the table on that, right? Like,
yeah, I love Miguel again. So
the extreme, that extreme. It's all about the extreme. You can dabble here and there. You want to put on VIX call spreads because you think we're closer. That's fine. But where you want this look to get aggressive is off those extremes because that's where it's at. That's where you have that runway. That's where the risk reward, you're not going to find anything like it. It's always at those extremes.
Yeah, that's why I love reading what he has to say too, and I like to analyze it only because when he gets into one of those extreme like percentiles, right? Like when he had prior to all this, dumping, like he was like, hey, we are now in the 99th percentile of X, Y, and Z. If you're going to play this and you were to buy VIX calls, let's say, because your win rate is like 86% on a back test of whatever. And I'm like, that is good enough for me to take a trade. Just off of that, because that's a nutty win rate. And if you happen to be the 14% strongest, fine. I'm willing to shoot on that because we were at the extreme. And what happened? He was so right. It was disgusting because then we dumped out and VIX got up to 40. So it was nutty.
If you manage your trades correctly, right? Again, on a risk reward basis, a loser is just a loser. But at those extremes, those winners are, you get a little lucky. They can be huge.
Right.
Huge, right? Huge. Like, think about the lows here. Even if you caught half this move, right? So you're risking just a regular trade, a loser, to catch half of this rip that we just saw. It washes out the next 10 losers, right? If you manage properly. So That's kind of how we approach the market. You got to look at it that way. You can't look at it like each trade, every trade, you're looking for a win at each trade. It's just not realistic.
Right, definitely. So what I wanted to do, Jay, was pivot a little bit too, and I want to show you something. So
yeah,
and hopefully we can get a story out of you. And by all means, if you have to leave at some point, but something that we're working on right now to kind of like help people understand like the journey of like how you got to where you're at, or a Ranch or Smiddy, me, other people in the room, is we built kind of this graphic, and this graphic basically has different stages of where we think most people kind of fit. And I wanted to show it to you because I wanted to ask you a couple things about it.
Okay. This should be cool.
So we have this trader journey graphic, right? So stage 1 is Herb life. This will be fun. It'll be easy, right? Never is, right? Then you have the grind, trying to be there, trying to work towards it. It's usually when you blow accounts. Then you start to get a little profit, right? So stage 3 is some hope. Then moving on to get like working profitability, the mind fuck of, hey, wow, I can actually do this. And then you have a little doubt. And then of course you keep going. And then equilibrium, which is where I'd probably put like you and Ranch and everyone is,
right.
Hey, I've been in this game long enough. So I'm curious, Jay, when you look at something like this, you know, what stage of this like sticks out to you of where you say, hey, I was in this stage the longest, and here's like not an aha moment, but maybe that's what it is, or I had to get past this hump, or even a good story about one of these stages that you've kind of been in?
Yeah, again, it kind of, I don't know exactly what point was what throughout my career. Because when I got into, and this is not, I don't feel great about saying it, but Smiddy, you might be able to relate a little. When I got into this game, I was risking client money initially. So a lot of the learning process wasn't my personal money I risked. You understand? I didn't have much money to lose at the time. So, I went through the process. I was a cold caller, making the $200 a week, pounding the phone. Then I became a broker. Then I had to build a book. So once obviously that the grind and the frustration for me was that was all that, passing the Series 7. Then, you feel like $1 million. I'm all suited up. I'm going to work every day. I feel like this big player. Now I'm licensed, but I still have no clients. I got to build a book. You know what I mean? I'm watching the market go up and down, and I hardly have anything to trade it with. So, that's kind of the frustrating part for me initially, kind of the grind in a sense, was that stage that no matter what, I had to work more focused on getting accounts and clients than figuring out the market, right? So for me, that was the grind. And then once I got enough clientele and some of that money under management, that's when I kind of took a dive into the markets and try to get a feel for things to see where I stand in regards to, emotionally, systematically. Do I have a philosophy that works? And that was kind of the next stage after my grind. So after I built that clientele with their money, risking their money, that's where I kind of got a feel for the markets and a better feel for the market. So the lessons I learned from losing money, I was fortunate enough that it wasn't me blowing myself up. You understand? It was clients losing money. And I don't know if that's better or worse, because you have to deal with clients, the phone calls, you know what I mean? Why did we buy that piece of shit and all that? So I don't know if that's any better.
Got to justify it all versus if you only have to justify it to yourself. Now you have to justify it to other people.
Yeah, there's no worse feeling, or even just underperforming and coming in the morning and your sales assistant telling you about 8 cats, clients moving out, going somewhere else, that whole process. So, and going back quickly to Smitty's point earlier, where you have to chase for performance, I mean, that happened to me. I was in cash because I didn't like the market, right? And the market's going high. I didn't care less. I wasn't comfortable in the market, but the longer I stood in cash, the more 8 cats. Clients were going to other brokers that were investing their money, right? So going to your point, Smitty, it was better off I invested the money and lost than sat in cash and watched the market went on. Right? So going back to this chart, the grind part for me had a lot to do with clients than my personal money. And then once I've learned enough and made enough mistakes, that's when, and obviously, I was into my career at that point. That's where I would place my money alongside client money. So now I was playing with my money alongside client money. You understand? So again, it kind of shorten the learning curve in a costly manner to my finances, right? My account. Like people, I don't know if they like whether they believe me or not, but I never blew up a personal account. Like I never, knock on wood, I never blew up a personal account. Now, again, there's an asterisk next to that statement because when I would have blown up accounts, I wasn't trading my money. I was trading client money. You understand? So a lot of the mistakes I corrected was not only what I've done for clients, but what I would see other brokers doing for clients, blowing up on margin, shorting in bull markets, right? You see, I'm a long only player right now. Why do you think I'm long only? You don't think I want action on the short side? You know, I just, from the environment I was in, I saw so many fucking players blow up on the short side that it scarred me so much that I can't even think about putting money on the short side. It's not worth it. Even if you tell me just to trade, short scalp and trade, it's not worth dipping my beak on the short side from what I've seen happen to people. You understand? Like a quick example, and you've heard me say this. I would used to go around the whole brokerage firm. It'd be full of brokers, right? And I used to ask them, if you didn't short at all, what would your P&L, what would your client P&L look like? You know what I mean? All the losses in the long run, they all came on the short side. All of them. All the big losses. You know? That and margin were the two, they were Satan. Right? That's where everybody blew up. They were either levered or they were short or both. You know what I mean? So
Right.
these things, you know, it quickened the learning curve for me as far as trading. So then when I got to a point where I didn't want to deal with the clients anymore, and I didn't want to deal with the have-tos, kind of to Smiddy's point where I had to chase when I didn't want to, that's when I walked away, when I felt comfortable enough to trade my own money. And I learned a lot from the mistakes I made for clients, for myself over the years, you know? But the big thing for me was the big pivot point was basically, and I know it like I talked about it in the past. My biggest problem was I got to a point where I was long only, and in a bull trend, in a bull market, I can make just as much money as anybody else out there. I was convinced. It really came down to luck whether you made more money than me, right? Playing the long side, because I wasn't going short, you know, and I was just going long, and I learned enough to pick the right spots and to learn all those other intricate details where I was convinced I can make money in an uptrend just as much as anybody else. My big problem was I would give it all back every fucking time that bull trend topped out. The first drawdown, not only would I give back all my profits from that whole bull trend and then some. And it was the most frustrating thing in the world because I racked my brain and I did all that to master the long side in an uptrend, only for one down leg, the start of a correction, to give it all back, you know? So that's what kind of, to me, was the big thing I had to work on. And that's where sentiment, positioning, this type of stuff came in to kind of get me out of the way from getting caught with a loaded basket into highs and getting, lit up. So that was kind of like, there's hope. I was more of a scratch player in a sense, right? Where I would make money on the upside and then get caught. But then once sentiment positioning came into the mix and fine-tuned when I should get out of the way and stuff like that, that's when, I was convinced now I can be a profitable player overall. And that was that there's hope stage for me.
That's awesome. And out of all of this too, like when you see this, Jay, right? Like, most people are going to be caught in like stages 1, 2, and 3, right? Once you get past 3 and you get into like the working of profitability, right? Again, it's still a big grind, but you've learned enough from your mistakes. The hardest part is actually getting to that point, at least in my opinion, right? Because you have to deal with the emotions of losing money, right? Always.
Yeah.
So like if you're talking to someone who's in this game now, right, and they're stuck in one of these 3 stages, like what's one piece of advice you have for them?
I think the biggest thing I thought was I think the most ridiculous thing that I would see, and I would hate to see it, was when players become scratch players, when they would get frustrated the most and then give up and walk away. And I used to say to them, you don't realize you're there now. You understand? Right. You're a scratch player. A couple of little changes here and there, and now that scratch player goes from scratch player to profitable trader. Okay. The point is you're not blowing yourself up. You understand? You're right on that line. You're right there. So you just got to figure out what's preventing you from becoming a profitable, consistent, profitable player from that scratch, as opposed to why you're blowing yourself up, which is a bigger problem, right? There's a lot of problems behind that. So I think anybody out there who's kind of in that scratch trader arena, to avoid getting frustrated and realize that you're closer than you think you are, and to keep at it. You know what I mean? Don't throw in the towel there. Because I think the toughest part is kind of behind you now. Not to say that you're going to figure it out immediately, you know, and you're going to be snap of a finger consistent trader after that. But sometimes you can get lucky and find something like you're saying, gamma. For me, it was sentiment positioning that really, you know, changed it for me from being scratched to consistently profitable and stuff like that. So there's no pinpoint thing. There's no timetable. Sometimes you get lucky. It happens sooner. Sometimes it takes a little bit longer. But if you're on that island, scratch island, you're closer than you think, and you got to stick with it.
Love it. Love it. That's great advice, Jay. Always great advice. So much wisdom from the godfather of the steam room. That's how it always goes. Cool. So now I think Smitty, it's time. I think it's time we bring it to this is our favorite thing to do, Jay. Like
yeah, you were telling me this. Good.
This is our favorite thing to do is this segment, and we call it trade or fade. Okay. Again, for anyone listening, these are not buy or sell recommendations. This is for entertainment purposes only. None of us are probably going to play any of these names that we're going to talk about.
Unless I say the word YOLO.
Yeah, there you go. So to recap what happened last time we did this, we had Smiddy, who's been getting murdered. Poor guy getting murdered in this segment. Finally went 3-0 on his picks. When we did this last, so 2 weeks ago, it was MSTR 420 calls. Smiddy traded him. I faded him. Smiddy won. ARM 130s after earnings. They dipped and then they ran that sucker right back up. Smiddy traded it. I faded it. Smiddy was right. And then on Amazon 190 calls, yeah, they gapped that sucker to the goddamn moon. Yeah, so I'll tell you what the expiration is. We usually change it, or depending on what it is. We used to do this off of Banana Man on Twitter, but he caught so much shit telling people to go max long when we were ripping lower that he now charges $40 on Twitter for you to see his positions. Makes sense, right? Lose everybody money and then charge $40 to recoup it.
That's usually the way it goes.
So Smitty went 3-0 for the first time ever. Ranch is not here to give you a gold star. I will give you a gold star, Smitty. Congratulations. And I had one of my worst weeks.
I get to throw in the I told you so?
Yeah, you can. Throw in the I told you so. And then I'm going to say something to you, and then people are going to cry about it. You know, I went 1-2, which not a great week, but it was fun. Ranch so far is the only one that's done it with us, Jay. I think he went 2-1. So we'll see if you can go 3-0. So again, I have not prepped anybody for what I'm about to call out. They have to make a quick decision in a minute or two. Smitty, I'll start with you on this one. And then Jay, it'll be the same names. We all do the same names.
Okay.
So we're doing core weave 90 puts for next Friday's expiration.
Wait, say it again.
Core weave 90 puts for next Friday's expiration. So all it has to do for this to be a winner, Jay, is it has to basically touch that strike line. It's not necessarily.
You got to go to 90.
90.
Okay.
Yes.
By next week.
By end of next Friday. Correct.
90.
So Smitty, you're up. What are you thinking?
I mean, I thought this thing was done going up at 65. So I didn't even look at it today because I was like, I saw calls come through at 102, and I was like, get the fuck out of here.
Yeah, this has been making a lot of us sick, this thing.
Right. So, my logic is it's got to come down at some point. And honestly, those 90s are not that expensive, trading, 450 on the ask. So I'm going to go ahead and fade this thing and if this little pullback continues that we got started today, I think this thing sells off quickly. So I'm going to trade that. I'll take the puts.
Oh, you're going to trade it, not fade it? So you're going to take the puts.
I'm
so
taking
you
the
are
puts.
trading this. All right. Smitty is going to trade it. Jay, what are you thinking?
Hold on. Tails. What did I say? Tails? No, I'm just kidding. But
He's doing a coin flip to figure this out.
I was since I don't play the short side with real money, I'll take the short side with fake money, and I'm going to go short. I think it hits 90, and then reverses and goes to new highs after that.
All right, so Jay is going to trade the 90 puts for next week, and we have a consensus. I usually would sit here and fade the shit out of Smitty, but since he went 3-0, I'm gonna do the same thing. I mean, given the volatility in the name, the odds of it getting to the 90 put, mark, and then it could bounce and do whatever. I really don't care. It probably, I'd say, decently high given this run that it's had.
Yeah,
I mean,
this run's insane.
It's just disgusting. I mean, I posted it today on Twitter. You had even after all the crazy call flow, even on Monday, you had a tack on call flow. Yep. Someone bought $1.1 million of the 100 calls and fucking probably tripled. So
you realize I day traded this thing twice, but I day traded this last week. It was in the 40s, I think, wasn't it?
Yeah.
It was in the 40s.
Man.
Yeah, in the 40s. Well, yeah, have to be in the 40s. Unbelievable. But you got an NVIDIA too next week, so that might have an effect on this, right?
Yeah.
Yeah. So
that is a monster move. Okay, so Jay, you're gonna do this one now. Okay. You're gonna start. All right, we're doing MSTR.
Oh.
Yeah, we got the good ones for Jay. MSTR 100 puts. Or no, not 100 puts. 400 puts. 400 puts.
Oh man.
Wait, no, hold on. I'm wrong. Wait. Hold on. It's not 400 puts. They're already fucking there.
Yeah. What is that? 401 now, right? 401 and a half?
Yeah, no, that's wrong. That's wrong. It's we're doing 380 puts. Sorry.
380.
Yep. MSTR 380 puts.
By next week.
By next week.
Yeah, I think Bitcoin holds a bit. I'm gonna say fade it.
So Jay is gonna fade the 380 puts. He doesn't think we're gonna get there. Smitty, what do you think?
Yep, I'm with him on this one. Bitcoin's been looking really constructive since those April lows, and I don't think the knuckleheads are done buying here. So I'm gonna go ahead and fade that as well. I'm with Jay on this one.
Can you imagine if they rip BTC to over 110 and then they just absolutely destroy everybody? I just love to see the world fucking burn, to be quite honest. I'm gonna take the contrarian on the both of you, even though I completely agree with your logic, and this is not real cash, but I'm gonna go the opposite side. I'm gonna say Bitcoin rips higher, then they decide to absolutely rip everybody's faces off sometime next week or over the weekend or whatever they decide to do. And I'm gonna trade this. I'm going to take the puts. So we have a fade from Jay and Smitty, and I am gonna trade it.
So Joe, our buddy who's super levered long Bitcoin, he's
tell Jay this shit. Tell him this.
Yeah, so Jay, yesterday when we were recording with Ranchero, that was yesterday, right? Or Monday?
Yeah.
So there's a kid, got super long over the weekend. He's 40 times levered Bitcoin. He was up at about 500 million long. He is now today up to $1 billion in open interest by himself. He's a single guy. Yep, on 40x leverage, and he went from being up 20 million to, in that poll that we had around, what was that, 12:45, 1 o'clock, he went from up 20, 25 to down 18 in about, what was that, an hour?
Down 18?
Down 18 million. Yep. So his position's about $1 billion. I'll send Joe the screenshot to send over to you.
Oh my God.
And it's not a firm.
It's not a firm. It's an individual.
It's an individual. So he's nice and levered up. He's either going to be the hero or a zero. Here come.
Oh my God.
Yep.
Yeah, you got crazy. I mean, this crypto shit. You got crazy motherfuckers in this thing, huh? Crazy.
Oh yeah. you know, I know a couple of these kids who were, you know, are real early to this game, and it just, that kind of money means nothing to them. So
That's what they made so much money that really they're at that point, right?
Yep, exactly. So it's the, you know, the kids who made the few hundred million to $1 billion. This is kind of just gambling money. They're like, all right, let's hit the casino. If I'm right, I win a Miami mansion. If I'm wrong, who cares?
Yeah. I can't. I'm telling you, this crypto shit really throws me for. It's the one thing that really spooks me. Like, you got all this other shit going on out there, from what we joke around, Pokemon, to fucking dark farts and fart coins. But the amount of money, and supposedly it's not that much in the grand scheme of things, but on the retail end, if Bitcoin ever really blew up, that's where you would see, I think, retail sentiment shot, right? Equities.
Well, that's the problem, Jay, right? The reason the way it is most people that are the bag holders of these cryptocurrencies are the people that have been in this shit since it was worth nothing, right? Or sub like 10,000, sub 1,000, right? So they're just they have so much stacks of shit, and they know nothing. They don't know anything about the game, really, right? Like, they're just YOLOing shit constantly.
Okay, but they're going to still hold, right? And more than likely, they're probably going to still hold, even if this thing comes down to,
of course,
3K, 4K, right?
They all held and probably bought more when Bitcoin got sub 20,000. I'll be honest, that's when I was buying.
Right.
That's what Smiddy was buying.
I'm one of those guys, Jay.
We were in that game, Jay, before
16, late 16. So I've been holding, my first Bitcoin buys were sub $1,000. So we were just buying it, and we had miners set up and the whole gambit, where it was like it was free money.
But let me ask you, Smitty, you don't think Bitcoin will ever see 5,000 again?
I mean, you know, it honestly could. What I will say is, I have found it to be, I went from, I thought this was going to change the world, this is going to be the new finance, to I'm at the point where I think it's pretty fucking useless. I have a bunch of Bitcoin stuck on a hardware wallet.
Wow.
Right. Well, but what do you do with it? I've got nobody who will take it. I've got one car dealer down in like Miami or Jupiter, Florida, where I could buy a car. Right. If I want to go buy the Lambo, we can get your Lambo steering wheel finally for your avatar. But he's the one guy, and even then, you pay a pretty hefty premium. So it's not, you know, the same car I could go downtown to the dealership and buy for $200. I got to pay this knucklehead $225, right? So even then, you're getting bamboozled. So it's outside of that, you know, there's a couple. If you want to swap useless for useless, you can go ahead and swap your crypto for gold. There's
they hit the lotto with Trump. Like, I think this shit would have been hit over the head without Trump anyway. Like, Trump, right? They got.
I mean, he made his own coin.
I know.
Yeah,
I know.
Yep.
The speculation in it, I just can't see how this doesn't blow up and hammer people. Just everything in general. The whole, you know, there's a lot of liquidity out there, and it's only a cycle, right? You've been through it, Smitty. I mean, you go through times where, you know, when people lose jobs and things get bad, and, you know, there's no money for any of this shit. It loses a bit.
Right. Yeah, you sell it out. You sell it out, and there's so many of those folks who refuse to sell, and part of it is the realized taxes on that. What are you going to do when you've got, you know, now all these games?
Do these people pay taxes when they sell? Or,
it depends.
It's a long time before options blew up. I know people who on the option trades wouldn't pay taxes.
It depends. It also depends though on your size. So like, look, if I had to guess, and I don't know this, but if I'm the IRS or someone else, if I can find a wallet, because it's all public, if I can find a wallet that I know is stacked with that shit, and then they put it into an exchange and they start taking it out, they're probably going to get, you know, if it's enough size, right, that's going to get flagged unless you go to another place and do it. So more than likely, yes, but a lot of them too, you know, if they were smart, maybe they took some of this shit out before it got popular to, you know, for the government.
Then you go buy the car, then you go buy the watches, right? Then you go spend it on the frivolous shit. But if you want to go buy a house, let's say you're a kid who made the, you know, 5-6 million, you got to go off ramp this on one of the major exchanges who do proper KYC. Coinbase, for example, they send you a, whatever the form is, I don't even know, 1099 something, and then you do have to file it. So that's I haven't recognized any capital gains with them in a handful of years, but they sent me a form. You file it with your taxes. You just pay it like you would trading gains. But there are, if you wanted to, if there were ways around it, you go buy a $300,000 watch. At the end of the day, it's a silly game to play, though. I think the young guys don't realize that. The older you get, the more you're like, I don't want these guys.
You used to be able to wash it. You used to be able to wash it, though, Jay. There was a website called Tornado Cash.
Oh, my God.
You could literally pop in, your wallet and what you wanted to do, and it would money launder for you into a bunch of wallets, and you had no idea. No one would know where it came from or how it got there, and you could just say your cost basis was the exact was this. So now you're paying nothing.
Like all that stuff, right? Always in the every boom cycle and anything, you get away with that shit, and then when it blows up, that's when they come after you, right? You're broke already because you lost money. Like the Madoff thing, right? He got away with all that throughout all those years. He got away with making shit up, and then when finally it blew up, right? You talk about reputable people. The owner of the Mets had no clue. He had no money in his account. You know what I mean? Think about that. That's how sick that was.
That's
so
wild.
I just think there's going to be a time in the whole crypto space. I thought we were there with what's his name, with the three names. That was
FTX.
Yeah. I thought we were there, and then it just caught a lifesaver at like the perfect time, and it just got bigger than ever now.
Yeah.
But when shit hits the fan, it's gonna be ugly.
Nutty. We'll see what happens with that. So we have one more trader fade. So we did two.
I didn't realize that.
Yeah, we got one more. That's okay. We just went on a tangent about this is what we do. We don't care. There's no rhyme or reason. We have one more trader fade. I will kick it off. It is APP.
Oh.
380 calls. So basically, you're going back to the most recent high and surpassing it.
No. Oh, 480 or 380?
380 calls.
Oh,
380.
380 calls.
So 380 calls by end of next week. I am going to fade that. I would not take the calls. I'm going to fade it. I don't think it's going back up there. But this also has to do with a lot more of my thesis that we need to have a little bit of a rinse and short-term shit.
Yeah. I mean, we could definitely 380. Yeah.
Smitty? Smitty, what do you think?
I'm thinking fade. They just earlier today caught a what is this claim of some fraud essentially. So
okay.
Oh yeah.
Wow.
Yeah, that may be older news, but I'm just seeing it for the first time. So I would go ahead and
maybe it'll pull a Carvana. They'll just get bad news and people just buy it because they don't fucking care. Piece of shit stock.
Yeah. And we're
Jay?
all going to be on the same side again. So whoever's listening, just go fade.
Yeah, dude.
Exactly what we said. I'm on the same side. I think it stays under there for the week.
Okay, so that's a fade. So we to recap, we have Core Weave 90 puts. Smitty is going to trade it. Jay is trading it. I am trading it for the MSTR 380 puts. Jay and Smitty are fading that. I am trading it because I want to see Bitcoin pull back. And then on the last one, which is APP 380 calls, we're all fading that shit.
Oh,
so if you're a contrarian, do the opposite.
Talk about consensus.
Yeah, the consensus is never good. But yeah, that's trader fade. I love doing it. It's
cool.
entertaining. It's fun to kind of fuck around and try to guess what we think things are going to do. Funniest part is some of these ones that we've like actually said we'd trade have been like monster. They would have been monster trades, and we never take. Right? We never take them.
That's how it works. The ones you're not playing real money with, you fucking make scores. That's how it goes.
Yeah, always got some fat pulls on a lot of those. But yeah, so Smitty, you got anything else for Jay, or Jay, anything else you want to talk about?
No, that's it. What are you doing, Smitty, in gold now? Anyhow, what's are you in wait and see mode, or you're buying off the recent dip?
No, I'm kind of wait and see. I caught, it sounds funny, but I caught that a little move off the 50-day moving average, which was a little past my downside target. But I think this thing looks pretty good for highs. From what I'm hearing from our bullion business end, retail is still buying hand over fist. Looks like Chinese positioning, like Chinese central bank positioning, is still at all-time highs. So I think that they've bought every dip that we've had in this thing. They've had a sharp buyback. I just don't think that people feel comfortable. You have the macro side of what's going to happen here with all the yields.
Yeah,
I think that we see a flock to, people are scared. That 20-year option, I was caught off guard by that. I think people are going to start looking for like, what is real money, right? I'm one of those dollars, the cleanest dirty shirt in the laundry, but people are starting to get scared. And if that's becomes an international thing, I don't believe we'll ever come off dollars, the world's, the standard. But yeah, I like the looks of gold here. I'm no position so far. I think I'm carrying one contract. Yet my client likes to keep one contract on all the futures that we trade, which is always so fun. He's an interesting character. But no, other than that, just my single here. So nothing big. I'm stuck in some Moderna. I'm trapped. He thinks Moderna. Yeah, he thinks Moderna's coming back.
They had news, what was it, yesterday, right?
Yesterday.
Yeah.
Jay, do you know the story of his Moderna?
No.
Oh boy, Smitty, I'm sorry to make you go down this road. But I think Jay will find it interesting, and it's actually a good story.
So my client has a knack for calling, and I've got one fat cat, right? And he fancies himself a stock picker, but his timing is usually off. So he calls me one Sunday morning, and he's like, "Hey, I think we need to buy a bunch of Moderna." And I was like, pop up the chart. I'm like, let's wait till the bottom of the range. It's been trading 28 to 23. Let's just give it a couple days. And he's like, nope, first thing Monday morning, I want you to buy 100,000 shares. He started with 300,000. And I said, look, make a deal with me. Let's start with 100. Like size and time is always the problem with us. And so I said, let me buy 100. I get the 100 at 27.88. And lo and behold, back to 23. We diddle around there. I bitched in the room for about a week and a half. And then I finally was like, all right, I'm not going to talk about it anymore. I'm sorry, guys. And sure enough, the day that I'm bitching yesterday again, people called me out and were like, I thought you said you weren't talking about this anymore. We get the fucking news. So I go from, down 400 to up 220. And I'm trying to get a hold of this knucklehead because the deal that we really have is anything. I've got a pretty open book to trade however I want until he wants a position. And then I've got to, then I call in and check with him and say, hey, we're in the money here. What do you want to do to manage this?
All right.
And he was on his little plane, his private jet, so couldn't get a hold of him. And I watched the profit just dissolve like sand through a sieve.
That's the worst, right?
Dude, exactly. So, and I was excited just to say, hey, let's get it off the book. So I wrote calls against it. I wrote weekly calls and, scrape a mediocre amount of premium in the grand scheme. But I'm stuck with this thing. I think it's the worst stock on the street. I've been saying that for weeks now.
It's pretty bad. But it's his pick though, right? So I mean, his picks have been they've been putting a little hole in the balance sheet this year. So I've got about a $2.2 million hole to climb out of. So you've been pretty bad, huh?
Yeah, we started off the year pretty good, and then had a couple bad picks, and that's that. I'm trading great.
He probably just likes the action. He don't give a shit, right?
Dude, exactly. This is kind of a plaything for him. And
he's betting the ball games, Joe. You know what he's doing? It's like betting the ball games.
Exactly. Yep. So he shows up.
Moderna.
Yeah, why not? And I've told him a million times, like, you want to gamble? Let's go to Vegas. You take your plane. They'll put us up in a nice room. You can go to the tables, drinks, ladies, whatever you need. Yeah. And we're yet to hit Vegas. He prefers gambling on Wall Street. So
where's he at? He's in the States?
Yeah. We're both down here in Austin. Yep. So
now, this is the same guy, the gold guy? Is that the same guy? Yeah.
Yeah, exactly. Yeah, that's his primary business. So they do about $1 billion a year in revenue. So it's
nice.
Exactly. He could care less about this account. So he's joked, if we blow it up, he'll just reload it. And I'm like, I prefer to not do that with this amount of money ever.
He just wants the action, right?
Yep. Just needs the action, man. And it's, as if he doesn't have enough going on in life, he likes to play the game, play the market. So, but it's fun, man. It keeps me busy and I get to hang out with you guys every day. So,
Yeah, definitely.
It's good stuff. But yeah, man, I did want to say, thanks for taking the time to hang out with us and do the podcast. It's always fun. Always.
You guys know I got shop all day long. I got a reputation for my webinars running on the long side of just shooting the shit. So I enjoy this stuff. And
Yeah,
hopefully I'll be back on sooner than later. Joe, he don't like to invite me. It's like
I feel bad asking you. This is the. I feel bad asking. Like Jay does the fun Sunday show. He does the what? I'm sitting there. I'm like, all right. I think it's been enough time. I can ask Jay to do it. He always says it's fine, and I always feel bad. I'm like, I'm like, you know what? Screw it. Let's do it.
Ask ahead of time, and I got nothing going on. Are you kidding me? I don't mind this shit.
It's fun, right? Like it's good to shoot the shit, talk about what's going on, especially when you have all this volatility, uncertainty, and all
when the
stuff that's
market's
going on.
No doubt.
Right, right. And then we try to have fun with different segments and busting each other's balls, and that's the fun of it. But yeah, Jay, thank you so much for joining us today. Much appreciated.
Definitely. I'll be back in a few weeks. We'll see, and we'll reevaluate here, see how things shake out.
I love it. I love it.
So 3-0, my trade rotation.
Yeah. Now, so the thing is, Jay doesn't realize we're putting $1,000 cash on each one of these bets to see who wins. Problem is, we're all on the same side -1, so it doesn't really help.
We got no shot. No shot.
Right.
But yeah, thanks everybody for listening.
Tomorrow, I might go ahead and send it. Joe, send me those picks. I'm gonna
send you the picks just so you can go buy them. Yeah, of course.
Why not? We'll do 10 lots.
I love it. Thanks everybody for listening. Make sure you like, subscribe, leave a comment. Much appreciated. We love doing this. If you want to see more of Jay, he is on the broadcast every single day in the Steam Room. Go to steamroomtrading.com and check it out. And he also has a course if you're interested in how he looks at flow, called the Flow Trader. We are actually going to be running a discount on that as of the release of this podcast. Or actually, which will probably be tomorrow. So, come May 22nd, which is tomorrow, we'll have a discount up on Jay's educational course of people that want to try it out. You get a free month of the Steam Room if you purchase as well, so you can learn a little bit more. So again, thanks everybody for listening. We'll catch you in the next one.
Yep. Good night, everybody.